Good day, everyone. This is Patrick from EasyFX Code Trading System, and it's Saturday, the 11th of March, 2023, and it's the weekly technical analysis for the euro, the cable, and the Aussie dollar for the third week of March. And let's begin with a quick look at these three major pairs for the week, and you see for all the major pairs, there's a tumble on Tuesday. And then recovery for both the euro and the cable by the end of the week with the NFP, US NFP report, except for the Aussie dollar, where it has still been constrained in a slightly narrow range for the rest of the second half of the week. And let's just take a quick look at what the key highlights were for last week. And the key impact on the Tuesday fall was from the testimony from Fed Chair Powell, a two-day event before the Senate committee. And he reiterated that they will do whatever they can. The Fed will do whatever they can to contain inflation and bring it down to its target rate of 2%. And they may continue to increase the rate of hikes, and could be even at an elevated level. So maybe instead of the 5 to 5.25 rate terminal rate, it could even extend higher to 5.5 or even 6%. So that was what spooked the markets, and overall risk off for all the markets, including the stock market. So US dollar got a boost from that on Tuesday, starting Tuesday and continuing on Wednesday. Then, however, on the Friday, things turned back around with a slowdown in the wage growth to below the expectation, and also a increase in unemployment rate. So it was a mixed bag where it did show some slowdown, but jobs added was still higher, still significant jobs added above 300,000. So slightly mixed, but the market took it at probably less inflationary with the slower wage growth. And we did also have a rate hike on from the RBA on Tuesday. So they did increase 0.25%, 25 basis points. But it still didn't help the Aussie dollar, and it still continued to weaken. So this coming week, there are some key highlights, and starting with the US CPI on Tuesday. So that's a very critical one again, and for the inflation indicator, followed by PCE, which is the following week. But the CPI and PPI on the Tuesday and Wednesday, then some jobs data from UK and Australia, and a key one from the ECB on Thursday with their rate decision, and which they're expected to increase 0.5%. And then Friday, there's a consumer sentiment figure from the US. So some significant news for next week to watch out for. Let's move back to the charts, and let's take a look at the euro. It started off the week trying to climb back up to the 107, but then hit hit the resistance zone and fell back down to the daily 200 EMA. Pause for Wednesday and managed to try to recover on the Thursday, and then that was the bounce on the Friday with the non-farm payroll report, and back up to the 107 resistance zone again. So it's still stuck within this zone just above 105, and it's not able to cross the 107 resistance. So we did highlight that the ECB is going to likely increase rates on Thursday, further 50 basis points. So it could be holding out, just waiting to see which way it's going to go, whether it's going to be a hawkish move or it's going to be dovish. And that's the key support zone here now at 105. So critical week for the ECB coming up. All right, so let's compare this with the US dollar index, the DXY, to see whether it's just an inverse relationship with this euro. And here's the DXY, US dollar index, and you can see that as a mirror image to the euro and the other major pairs, the Tuesday was a big bounce and from the US dollar with Fed Chair Powell's testimony, and ran through the 105 resistance zone until it hit the recent swing high at the 100 FIB, where it closed as almost a doji and then turned around and gapped down on Friday with the non-farm payroll report and spiked through the support zone again. So still struggling to make any headway higher. And I think it's probably going to stay this way until the week after with the FOMC meeting coming up. So it did manage to close above the 55, but it's stuck between the 55 and the daily 200 EMA. Also to note, this coming week is the change in the time for the daylight savings for the US. The UK and Europe will follow 2 weeks later. So on your MT4, your 4-hour closes will be 1 hour ahead now. Okay, so this close, we can remove this trend line and this trend line here. Support is still at the same area. Major support below that at 103, and as well as the 50 FIB retracement. So it's still struggling to break out above this swing high, and still finding support from the 62 FIB retracement area. So it is in the upper range of this retracement. So let's see whether it's going to break out higher or break down back into the next key support zone. Unlikely it will happen next week with the FOMC coming out the week after, but we'll see what the impact is from the CPI data. All right. Let's also take a quick look on the weekly time frame, and yes, it did close as a doji, similar to a lot of the major pairs as well. Okay, so let's move back to the other major pairs. Let's move on to the cable, and similar to the euro, it did drop, fell hard on Tuesday and fell through the support and below the 38 fib retracement level, but then struggled to find some support and managed to recover back with this morning star pattern here, and managed to just hang on till Friday before it managed to rally and break out higher back above to the 21 fib again. And that's where the daily 200 EMA is as well. So it's managed to dip lower and then managed to climb back up. So let's take this one out and keep the resistance zone there. Support is still at the 38 interim support. The major one is still at the 50 fib. And not next week, after the ECB's turn, the week after will be the Bank of England's turn together with FOMC. So the week after will be a very volatile week indeed. So it will also be exposed to US CPI news this Tuesday, and they also have some jobs data coming up. On the weekly time frame, it closed as a doji. So still trying to stay above, float above the 120 round figure. And they managed to hit the 121 at the 21 fib. But just trying to stay afloat above the 120 round figure. So let's see if this trend line is able to hold. Let's move this one out and this lower trend line, and it's looking more like a channel now. Okay, so let's see where it's going to continue. It's likely just going to bounce around the 120 zone until next week, with the until the week after, and the Bank of England announces their potential rate hike. So it could just range in this channel. Okay, let's move on to the Aussie dollar. And the Aussie dollar is still looking bearish and weak, with a massive drop on the Tuesday, and dropped through the 66 round figure, and trying to struggle to climb back up, but unable to close the week below that. And on the weekly time frame, it's a bearish close as well. So looking like it's going to continue to drift lower down into the 65 round figure. That's the 50 pip below that as well. So we'll mark this as a key support here. Now this zone is it's going to be an interim resistance. And let's move this resistance zone to the 67. All right. So it'll be also exposed to the CPI figure coming out on Tuesday. And we'll see if it's able to hang on or whether it's just going to tumble down into the 65 support zone. And it's tough to see it trying to hang on. All right. So do check out my other videos on spot gold and dollar yen, and have a safe week and a good trading week, and cheers for now.